Well, I learned from my mistakes.
Because the best time to get rich is when markets crash.
And they could flood the world with fiat money. I mean, currency, that's paper. That's all it is. I've made more money in the last 3 weeks.
We're in an economic downturn, a crisis that has a health part of it, has an economic part of it, has a monetary part of it. We estimate right now that the corporate losses would be in the vicinity of, in the U.S., about $4 trillion. Globally, probably about $12 trillion. There'll be big losses. And those are corporations. There'll also be individuals who have very big losses and individuals who can't afford the shock that they're going to have.
The Chinese are buying commodities. They're buying copper, oil, gold, silver, land. You know, they just did that huge Canadian tar sands deal up in Canada. So that's all I've ever done. If you look at my investment portfolio, I started investing in oil in 1966, real estate in 1973, and I have my own gold mine and my own silver mine. So if you're afraid of inflation, which you should be, I would think silver is the #1 investment today. Silver is a smoking deal. And silver at about $15, $16, $20 an ounce, average Joe can do it. You know, you just cut out your Starbucks for a while and go buy some silver. You're in the game. Silver is one of the biggest things against inflation you'll ever see. Great investment.
I would say 3 things to your generation, okay? 3 recommendations. The first recommendation is to think about your savings and how much money do you have for savings. And the best way to think about that is to think, how much money do I spend each month? And how much money do I have saved? How many months am I going to be okay without that? And to value savings, right? And calculate it, because savings in that is freedom and security. And think about what that is. So that's the first. How much do I have for that? The second thing is, how do I save well? What should I put my saving in? And when thinking about what you should put your saving in, realize that the least risk investment that you think from volatility is the least risk investment, which is cash, is the worst investment over a period of time. And you could judge that by judging the rate of inflation in relationship to the after-tax income you're going to earn. So if you have an inflation rate that's 2 or 3%, and you're earning 1%, and you have to pay taxes on that 1% or the 1 or 2% that you're going to get, you're going to get taxed essentially at 2% a year, and that's going to be a problem. So you have to move into assets, other assets that are going to do better over a period of time. And when you do that, the most important thing I convey to you is to diversify well, because I can guarantee you that one of those assets, and you won't be able to pick the right one, will be disastrous in your lifetime, that you will lose half of that savings if you're in the wrong one, and you won't know what the right one is. And so pick different countries, pick different asset classes. That would be the second thing to learn. The first thing is think about how to save. Be cautious about debt. When you're thinking about debt, think about, is that debt going to help my savings, or is it going to produce an income? Sometimes debt, like buying a house or buying an apartment or buying an asset, it produces forced savings. Forced savings is a good thing. Or if you're taking on debt and you're thinking, am I going to have that debt in an asset? That asset better produce more income than the cost of your debt. If you're using debt for consumption, that's not a good thing to do. Okay, you're giving up that safety. So number 2, make sure that you think about the diversification of that, not in cash. And number 3, do the opposite of what your instincts are. If you're going to play the game, it has to be the opposite of what your instincts and the crowd says, because the market reflects the crowd. So you want to buy when no one wants to buy, and you want to sell when no one wants to sell. And that's emotionally difficult. I would say that if you're going to do it in the ways that are uncomfortable, because they're opposite your instincts.
I mean, you guys got it tough here. You know, it's a tough market here. You got smart people. What's going to happen now? I think there's probably an 80% probability the next depression was coming. Okay. Now, that's bad news for some people. This is good news for me. Because the best time to get rich is when markets crash. You know what I'm talking about here? That's the best time. And so the problem is, like let's say Polo or Prada or Armani announces they're going to have a sale. 50% off all Armani sports coats. Shit, every consumer would be in there buying Prada shoes, Armani coats. Oh, it's on sale. But the stock market has a sale, or a real estate market has a sale. All those idiots run. You see, that's the difference. When markets have sales, you go in. When Prada has sales, don't go. Everybody understand that? Okay? So anyway, that's kind of, it's really that simple. It's not that hard.
So that means today, what's really interesting is that there is more gold on planet Earth than silver. It's fantastic. And back when, 1 year ago, I think silver was 50 times less expensive than gold. And for 1 ounce of gold, I could buy 50 ounces of silver. Today, 1 ounce of gold will buy 70 ounces of silver, which means silver is a bargain today.
Prices of gold, silver, and Bitcoin will crash too. The reason is when the markets crash, whether it's stocks, real estate, you call that bonds, people need cash. And so when the markets crash, they have to go to cash, and they'll sell whatever is most liquid. That's the key word. So what gold, silver, and Bitcoin are is liquid, so they'll sell that off too. Now, that's bad news if you're holding it long, but it's good news if you're buying more of it. So every crash, it will come down. And if you're long, if you actually are confident that the government's going to keep screwing up, the government's going to keep printing more and more money, which they will when the pensions go broke, just keep, every time it drops, buy more gold, silver, and Bitcoin. And for most people, silver is the most affordable today. It's also the most volatile. If you can afford $20,000 Bitcoin, buy it. You can afford $2,000 gold, buy it. And if you can't, buy silver. I hope I'm wrong, but I think we're heading for a global depression. I mean, people are depressed. The economy stays down. It's hard to come back up. And now the good news is that for those who are prepared for it, like you and things like this, you'll do better. Because the best time to start a business is right after a crash. I made more money after 2008 than ever in my whole entire life. All the bargains that are going to be on the street, you know what I mean? It's going to be bargains everywhere. But everybody else, oh, you're pessimistic. No, I'm actually optimistic. Guys who start right after a crash do very well most of the time. Well, first of all, everybody can do something, but they won't. And that's the problem. And I think the problem with many Americans is they're complacent. They expect, well, it'll heal itself again. So the thing that everybody can do is, as I covered in Fake, my first investment was a gold coin in Hong Kong. I bought a Krugerrand. I was flying off an aircraft carrier in Vietnam. And I went to Hong Kong and I bought a gold Krugerrand. The date was 1972. The reason the date's important is because in 1972 it was illegal for Americans to own gold. So I had to smuggle that little puppy into America. I put it in my pocket, came off the ship, and nobody checked, But I felt like a criminal as I smuggled this gold coin because it was illegal for Americans to own gold after 1933 under Roosevelt. But that gold coin today is worth almost $2,000. Because I understand money, that, quantitative counterfeiting and zero interest rates, I don't trust the dollar. So for most of my life, I've saved gold and silver. I have millions in gold coins and silver coins. I just kept saving it because I don't trust the dollar. So everybody can buy a silver coin today for $20. A silver eagle is $20. But how many people will go to a coin shop and buy it? Probably none. Less than 0.1% of Americans own precious metals. And silver today is 50% below its all-time high. So silver is the biggest bargain sitting in the market as we speak today. It's about $20. It should go to 50. So at $20, and I tell my friends, I go, oh, yeah, think about it. That's the problem.